What's going on, y'all? This is Lance back with you after a short little, I won't call it a hiatus, but a little break from putting up videos. I just got tired. I typically my day, Monday through Friday, runs from like 4 to 4:30 in the morning until late at night. So after a little while, your body kind of forces you to lay down and relax a little while. So pretty much all last week I decided to sleep in instead of waking up during my usual wee hours of the morning. Um, and so I'm back at it. It's not really late. It's only 9, as you can see, a little bit after 9 Eastern. Um, but I'm gonna discuss a particular tweet that I saw on Twitter, of course, from a very popular trader. Not gonna say any names because I don't, I don't co-sign people generally. But very popular trader who is one of those traders, like many traders, who like to uh, present themselves as an authority on something that they say that they don't use. So this guy doesn't use charts, according to him. And he says that, charts are useless, and he says that charts create bias and yada yada yada. So recently he put up a tweet about Tesla, and he stated that he actually said that every single chartist missed out on the trade of a lifetime. And he was talking about Tesla. And his supporting information for that argument was because there was a Fibonacci extension at $320. So let me say, first off, charts reflect market sentiment at any given moment, regardless of the news flow. The news flow is included, is what I mean. Um, doesn't matter what's happening. Any chartist worth their weight in gold would agree to that. There are many instances where you can see a news a piece of news drop in the markets, and the charts react immediately to that news. So, uh, I people who say that kind of separate news and charts, I tend to kind of block them out when it comes to charts, at least. That's not to say people who think like this aren't great traders, but when it comes to charts, I tend to not listen to them because I've been studying charts for a few years, and I've observed different, price movements under different types of market conditions, news being dropped, President Trump tweeting, just all kinds of stuff. Um, so let me say that first and foremost, um, that charts reflect market sentiment, and that includes the news and, all kinds of stuff happening. Um, Two, any type of any piece of information can create bias. Charts in and of themselves don't necessarily create bias, people do. um, the news is what it is. You interpret that news to be bullish or bearish or neutral or insignificant. It's you that creates that bias. So I can look at a chart and say, this chart is clearly bullish, like the chart before you, Tesla. This chart is clearly bullish, as in it's on an uptrend. However, I also understand that at any moment the trend could change, and that could be reflected by, basic market sentiment over whatever event or whatever's going on. Um, But news can also create bias. So if some news drops in the markets tomorrow and you are for sure that that news is bullish, however, the price action does not reflect that bullishness, then what has happened? Do you blame the markets, or do you say, maybe I misinterpreted the news, or I just had a little bit of bias built into that? Many traders, including this trader, has been caught on the wrong side of a trade based on some news. So uh, don't let people influence you to believe that trading news is 100% just foolproof. It's really not. Um, there have been so many instances where a piece of news that you would think is bullish or you think is bearish uh, comes out and the opposite happens in the price action, you know? So not any one method is foolproof. Whether you trade the news, whether you use charts, whether you just simply watch price action, whether you read the tape, whatever you do, no one method is 100% foolproof, you know? Um, but where you get that edge with knowing how to read a chart is if I see news drop, right? Some significant news drop, and I go to my chart, if I see that the chart is not um, reacting to that news, maybe it's not as significant as I thought it would be. However, if I see the price action start to react right away, then okay, I'm looking for an entry potentially. Um, so it's not that I'm looking at a chart and I'm like, okay, this chart is bullish, so I'm going to be looking for calls or some sort of bullish position. And this news comes out that is bearish, but I'm just going to trade the charts because the charts are more important than that news. No, the chart is simply market sentiment. It allows you to see market sentiment on a screen in a in an illustrated format. So market sentiment is it includes the news and any other type excuse me type of event that influences buying and selling of stock. That's all. And the news is included in that. So I'm just trying to dead the myth and the BS that these people who claim that they don't use charts are putting out, that charts are useless, and that oh, news trumps charts and stuff like that, when you don't understand that charts don't work that way. They don't work independent of the news. They really don't. um and back to his comment about Fibonacci extensions. So any trader, any chartist knows that when it comes to areas of support and resistance, those aren't necessarily hard lines. Like, okay, if I'm looking at Tesla and I determine, 320 to be an area of resistance, then I'm expecting uh, that when the price action hits 320, Tesla's going to go down. No, absolutely not. You're looking for other signs that would indicate, potentially it could turn and reverse the other way. But it could also blast through that level as well. So you're looking at news. You're looking in the news for market sentiment. You're looking at the chart for market sentiment. You're looking at other indicators. You're looking at the candlesticks themselves. All kinds of things that you can look into to build your case for, is Tesla going to be bullish, or is it going to be bearish, or is it going to consolidate a little bit? Um, it, it, it was a really poor case for why this trader felt like, charts are no good, and that every single chart is missed out on the trade of a lifetime. Um, lots of traders in my group, and we're more uh, chartist based, but we also pay attention to the news. Um, a lot of us were trading in and out of Tesla as it ran up. So none of us, none of us were biased to the downside. And from what I've observed, it's been people that are more fundamentalists, and that means they look at uh, the health of the company in terms of its finances. Those have been probably the bulk of people on the short side for Tesla. Um, I can't speak for other chartists, but the chartists that I'm connected with, we were all bullish on Tesla. So it 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 was really a poor thing to put out, and a lot of people won't necessarily challenge his or challenge that trader's what they say, um, because of I guess who they hold that trader to be in terms of esteem. Um, but yeah, I what I find is that people who have such things to say about charts, they don't really do the knowledge when it comes to charts, right? Um, there are so many different techniques and strategies when it comes to trading the markets overall, but there are so many when it comes to using a chart. So many people use so many different indicators, and somebody who uses a Fibonacci extension, there are people that use Fibonacci levels and simply trade those levels. But that does not encompass every single trader, right? I personally use Fibonacci levels to just make note of significant levels. That's it. But I don't I don't assume those levels to be, hey, when the price hits this level, it's going to reverse trend, or no, I don't. I consider that as a possibility. Also, when I in my workshop, I teach high tech options. Accelerated is the name of one of them, and then high tech options is the other. Um, I actually teach my people to build a plan, a trading plan that virtually eliminates bias from your perspective. So the point of that plan is to say, okay, it's basically a series of if-then statements. If Tesla meets these criteria, then I'm going to be bullish. I'm going to get calls. However, if Tesla meets this set of criteria, I'm going to be short Tesla, meaning I'm going to get puts. And that's it. So either way, no matter what happens, you're prepared. You're not biased in any form or fashion. You can see both sides of the trade. And like I said, you're prepared for anything to happen. So I teach that, in my workshop, high tech options and high tech options accelerated. Um, but don't believe for 1 second that only charts create bias, because no matter what strategy you employ, there can be bias, and I am of the opinion that people create bias, because of how people interpret things. Charts are very subjective. Like I said, many different people use many different techniques and strategies. I can look at one chart and see one thing, and somebody else can look at a chart and see a whole another thing. So just like the news, I can look at a piece of news and say, "Hey, that's bullish news," and then somebody else can look at the chart and say, it might be a little bullish, but it's really not that great." So people create bias, you know, and whether you choose to use charts or not, there's there's bias. You have to work that out within yourself to where you train yourself to not be biased in general. And like I said, I teach that, and I have a specific strategy and method for that in my chart workshop. So Um, Matter of fact, I'm gonna just demonstrate right quick. I can put a simple study on this Tesla chart here, and this is a daily chart. So you're looking at 1 year of price action for Tesla, and you're looking at 1 year price action for Tesla on a daily chart. So every candlestick there is 1 day. So all I'm gonna do is put a couple of yeah. So I'm just gonna put a couple of moving averages on this chart, and as you can see, probably the according to this simple strategy, Tesla formed what is considered a golden cross right at about 339, so about right here. So you really could have bought calls. I mean, of course you could have bought calls much sooner than that, but this is where the moving averages crossed in a bullish manner, and they have not crossed, did a bearish cross since then. And this was back in December 10th of last year. So it really depends on the strategy and the chartist, so you can't make the statement that every single chartist missed the trade of a lifetime. you know like I said, there were many traders that were in and out of Tesla, as Tesla has made this crazy run almost to 1,000, and now sitting at high 800s after hours. So yeah, I didn't want to spend a whole lot of time on that, but I had to um, just give people a little bit of a different perspective, not even a little bit, but a completely different perspective on that whole situation, in that particular tweet. So as you can see, it really depends on the trader themselves and their ability to read price action on a chart. Um, but to make such statements is really irresponsible. But I understand, marketing and stuff like that. But I'm here to tell you it's completely false. But if you have any questions about charts, you want to inquire about my workshops on how to read charts, feel free to hit me up. Lance at bhcapitalenterprises.com. Find me on social media, Instagram, Twitter, and Facebook, BH Capital Enterprises. Of course, you can leave a comment below in this for this video, and I'll be happy to chat with you. But you guys have a great day. Thanks for watching, and remember that the dream never sleeps.